Aloha, I'm Xeyyakkenn, you're awesome, and this is Xeyyakkenn Investment Values, specifically portfolio 8, which is the 10th portfolio. But regardless, as you know as well, at this point, I'm obviously not a financial advisor, cannot give financial advice. None of this is financial advice, and I highly recommend you do your own research and don't take financial advice from a random video online or even just a random person online. That being said, though, for the Xeyyakkenn Investment Value 8 portfolio, as I mentioned in the previous video, I thought I was at the end of Q2 picking the stuff, so I didn't really do a full actual quarterly analysis view or quarterly analysis to pick the stocks for the Moonshot of Xeyyakkenn 8 or Xeyyakkenn Values 8, XIV-8 going forward. So I had to do that today, the next market day after making that video and realizing my ridiculous mistake. And actually some interesting things came up. If you saw that video, you may recall actually on the last time around that we actually had some stocks that I was going over and showed kind of what I would have been picking towards. But before I even do that, I should probably state, again, the winners and losers here as to what I was holding before. So what I was holding before, let's go ahead. One of the things I was holding before was CCK. I don't even remember what that was. No, and as for whether I'm in it now, no, none of the stocks that my Moonshot core was in for quote unquote Q2 made it to this Q3 cut here. But one of the things I was in was Crown Holdings Inc. And I came out 2.8% ahead, 2.81% actually. So, I mean, like I said, it was a very short hold on those positions because I've already reiterated that. So a very short time holding it, but I got out at about 2.81%. Not bad. The next one that I was into for what would have been quote unquote Q2, we'll see how long this takes to load up here, was the Halo stock or Halozyme Therapeutics Inc. And I came out on top at 3.94% actually by the time I exited. So that wasn't too bad. Now the next one that I was in, let's see here, VLUE. What do we have here for that? So the next one that I was in was the iShares MSCI USA Value Factor ETF. That's a mouthful there. And that one I was technically up at 0.17%, so 0.17%, so barely up, but it's up. Hey, up is up. We count that. And then for VOOG. Let's see what we get here. So for VOOG, I was for the Vanguard S&P 500 Growth Index Fund. I went down on that one about 1.18%. So that one I exited at a loss there. And then for XPO, this was that trucking one, wasn't it? That transportation company. So for this one, I ended up, you just call it XPO Inc. Okay. Now for that one, I also ended up in a loss of 1.19%. So with the 1.19, the 1.18 negative against the 2.81 positive and 3.94 positive, I would say overall I made up positive. What my total downside was, 2.37. I'm not even including the 0.17 positive. I guess I could include the 0.17 positive, but 2.37 downside on the VOOG and XPO compared to the upside that I got on CCK and Halo. Including VLUE as well for the barely upside, but upside nonetheless. Overall, it was positive on that for QQQ. Went positive. That's great. Now, I said positive for QQQ. Positive for quote unquote Q2. But that being said, now when I went over this before on the previous video, the things that I ended up going into this time, actually, I'll just go ahead and go into that, because for the quarterly analysis, we use FinViz, and I'll show you the filters here later on that I actually use. I thought about gatekeeping those, putting it behind like a $1 per month Patreon of what my portfolios actually do and the rules behind it and all this other stuff. But then I'm like, I might as well. I'm not gonna gatekeep. No, I'm gonna gatekeep. I'll spread the love. It's not like I'm completely unique here and all this, right? So the first one that we ended up going into for quarter 3 is Dell. Dell has been doing good. Dell Technologies Inc. They've been doing good. They've met the criteria. They've met the filters that I'm using for this. They ain't doing too bad. Ain't doing too bad. The next thing that I was going into here is Kinetic Holdings Inc. or KNTK. They've also been doing good or well enough. And then the next one that I was going into here is Humans Inc. I mean, they fit the criteria. I'll explain the criteria in a bit, but it's Humans Inc. Again, now I'm kind of just like going quickly through these because, again, as I've said in the previous video, or for anyone watching for the first time, we don't really care about what they do or what the company is, what they do, what their fundamentals are, what their philosophies are, how. We don't really care. We only care about a few certain things that if they fit this filter, we go into them, and that's about it. That's all we care about. So the next one that we're into for quarter 3 is LabCorp Holdings Inc. And then after that, we are into Red Rock Resorts Inc. And then after that, we are into Portland General Electric Company. And then I have a funny story about the next one, but after that, we are into Texas Roadhouse Inc. Now, if you did watch the previous video, you may realize that the last video I had 8 stocks chosen, and I've only shown 7 so far. I'll explain that. Actually, I'll explain that now. So the other stock that was going to be chosen was ticker symbol GTLS, which is, I think, Chart Industries, because I mentioned in the last video, like, what do they even do? How do they? Anyways, Chart Industries. Unfortunately, Chart Industries is on the market no more. Chart Industries had a merger with Baker Hughes, and so all the Chart Industries common shares were canceled and converted, and people got their stuff. But now that apparently happened on July 16th, I want to say 16th or 17th, somewhere around there. And yeah, it obviously when I was running this, when I made the video the other day, which is still well past the 16th or 17th, it showed GTLS at the time, because at the time the company had still met certain criteria, but it wasn't there. So at the time of when I was actually distributing these funds into these things, like GTLS was actually number 7 on the list. So I just doing stuff in order. I got down to GTLS, and it didn't. There was no GTLS. And I was like, well, I could either put the rest of this in the Texas Roadhouse, and it gets double the portion of the rest of the guys in this Moonshot core, or just put it into QQQ for the portfolio. And I just ended up putting it into QQQ for the portfolio because that's where excess, quote unquote, things would go anyways. And the excess, as in if a position reaches, if one of these Moonshot core positions ends up reaching more than 1% of their 1% of the total portfolio, that type of thing. Something I'll go over probably later on in this video, or in another video where probably in a different video where I actually explain the full philosophy of XIV-8. But anywho, so that's what happened to that. So that ended up just going into QQQ. Now, like I said, this time it's time for me to actually explain the quarterly analysis that we actually do here, and as to how I even come up with these things here. So the first thing we do is check trading view. Monthly, we're checking trading view just every month. I mentioned this in the previous video, but I'll try to keep it short here because that video was way too long for what I actually ended up saying. Monthly, we are checking this for specific. Actually, I did add some things on the app version here, some other things to watch in this watch list here. I'll do that later. Get to that in a moment, because we had some. Anyways, no, I'm going to get distracted. I'll just talk about all that later. That's for a different video. Now for, oh no, it's actually there. Your skin D is there. Skin D. Actually, you know what? Let me just go. No, distractions. All right. So the only thing we're checking here is the S&P 500 index. Its current price, which is 7413.18, compared to its simple moving average, which is 7,922. If that's positive, we have half the indicators that we need to be in attack mode. If you saw my thread or X/Twitter, then you would know I posted a little symbol, a little like swords and shields and a GIF for attack mode. I'm going to try and do that monthly. Just one, to actually like get practice using social media. I don't really use social media much. I just see some stuff, I scroll, laugh, react, scroll, laugh, react, share, scroll, laugh, react, share, scroll. Like it's just that. I don't even do that much, but when I'm on social media, that's pretty much what it's there for. I just see some stuff and laugh. So what I'm going to try and do is every month that I actually have the indicators present of whether to go into attack mode or defense mode, I'll actually post something there. So then people can easily see. You don't have to get in my videos all the time to know it's what. If you know how the portfolio works, you'll know whether I'm going into attack mode or defense mode each month. Yeah, I guess. But yeah, that way just know. Anywho, but since the simple moving average is above, 200-day simple moving average is above the current, or below the current price, then we're good to go. If the current price is above the simple moving average 200-day mark, we're good to go on that half. The other half is the US 10-year to, see, it does this thing when I click on that. It doesn't mark it. It does it like shows the 10-year information. I don't care about the 10-year yield. I want the US 10-year to 2-year split, specifically that. And as long as that number is above 0, then we're good. That's the other half. So since it's above 0 and the S&P 500 is above its 200-day simple moving average, then the Xeyyakkenn Investment Value 8 portfolio is in attack mode. That's what we check every month. Now, every quarter, we're going to check FinViz as well as TradingView, because TradingView is monthly regardless. But at the quarter, which means I won't be checking this again until quarter 4 for the year, we look at FinViz. And if you'll notice, as this compared, the same filters that I had on last video are currently on right now, but you'll notice this list has changed, probably because simple moving averages have changed, and maybe they updated to get rid of GTLRS. Who knows? But I won't gatekeep for you what the actual filters are that I use, but I will say the stocks that we pick of the Moonshot core are based on these filters. If they don't make these filters, we don't pick them. We don't care what everyone's talking about. We don't care what's hyped. We don't really particularly care about what's getting hyped or what other financial YouTubers are talking about or what they're going for. And you may notice as well, in the last time I ran this, like I told you, I just showed you the stocks that I went into based on what this filter shows on FinViz here. But you'll probably notice Texas Roadhouse ain't up here. Oh, wow, GTLS actually is there. You don't even exist anymore. That's literally the difference one day made. It's because I'm making this video at the time of recording. You can see the dates of when because I show these are live screens here, so I show you the date. You see the dates when I pull them up and search them up. This is I'm literally recording this after the next market day. And that's how drastically it's changed. It went down from 8 to 5, or effectively 7 to 4, because GTLS does not exist as a tradable asset anymore. Look at that. The volume's at like 0, regular volume 0. Anyways, eventually this will update to no longer have this around, I assume. But you'll see Texas Roadhouse isn't on there. But we still got Texas Roadhouse because that's what our That's what our screenshot showed at the time. Actually, I think I ran this. Did I run it this morning? I think I ran it last night. Now, when did I run this again? I think it was last night. Still before market. It was still over the weekend. So the results were still the same from my last previous video. But that's also part of why we only check this quarterly. We're not going off. We're not checking this daily to see what stocks make the filter. And if it's not in there, oh, we got to get out of it. We're not doing all that mess. Part of the Xeyyakkenn Investment Value portfolios is simplicity. Even for the most active version of this portfolio, which is XIV-8, the one that I'm running and showcasing here. Even for this most active version, we're still aiming for simplicity, because ultimately the ultimate goal is to, retire early and have a great peaceful retirement once we get there. Now, the portfolio will choose different things. We don't even do this part anymore once we're in retirement, but that's again another video to explain the values, the philosophy, what the goal is, how this all functions. Right now I gotta stay focused here, stick to just this quarter's stock picks. So but again, that's why we don't check this daily, because stuff changes daily. We're checking at each quarter what is currently good at that point in time, and then we DCA into that, or dollar cost average, in case you don't know, into that until the next quarter, and then we check and we see, well, is it time to get out? Is it time to stay it? Let's say for example that the stuff I just showed you over here, the Texas Roadhouse, the XPO, the PORR, all these ones over here that I showed you. Let's say, for example, that was indeed quarter two. That was all of quarter two, just as an example. And then today is the beginning of quarter three, and we look at that and we're like, oh man, that list has dwindled down some. Well, here's the thing. The ones that are still in the list, we keep those. So for example, Dell was in the list. We keep Dell. RRR was in the list, so we're keeping RRR. Now IVZ is new, so if this was the beginning of quarter three, then we would be going into IVZ. POR was in the previous list. Yes, it was. And then GTLS was in it, but it doesn't exist. So what's not in there? Texas Roadhouse, XPO. So what we would have done if this was the change of a new quarter, we would have sold out of XPO. We would have sold out of Texas Roadhouse. Hopefully we made profits on that. Hopefully we didn't take any losses. Even if we did, it's okay. This is only a very small percentage of our portfolio here, but we're hoping it's wins. Now, for example, Dell, we would just keep DCAing into Dell and we'd stay holding on to Dell. Now, if Dell had shot up, and it got to a point where it was bigger in my portfolio than what it should be, then we would trim off some of that. We would, lock in some of those profits to get it back to that ratio that we're looking for at the start of the next quarter to keep everything balanced. We would trim off some profits, but we'd keep DCAing into it. So the only ones that would have made it from last time is Dell, RRR, and POR. IVIZ over here would be new. GTLS doesn't exist, so you'd only have 4 stocks going into this quarter. This last go round, I had 8 or 7, really. Now I'd be down to 4, and that's okay. That is perfectly okay. The Moonshot core only makes about 5% of the whole portfolio for XIV-8, so that whole 5% would be basically divvied up between these 4 stocks, which might push them past the 1% rule, and that's that's a whole other issue there. But that's what we'd be going into. That's what we'd choosing. Now, like I said before, I would show you the filters, so I'm going to show you those. I'm not gatekeeping around here. I'm not really worried about alpha decay, so to speak, because it's not like the strategy is entirely unique, and I'm the only one in the world who's ever come up with or thought of this. Not quite. Otherwise, these filters wouldn't exist, and I'd have to be doing all this manually. So obviously someone thought of these things. Maybe not this specific combination, but actually there's probably YouTubers out there who absolutely have this specific combination, and probably even more refined. So starting off with descriptive, we want a market cap that is the mid over 2 billion. We want this company that's not a penny stock. That's the main thing we're trying to avoid here. We don't want penny stock companies. We don't want to deal with the penny stock shenanigans. Also, some of those probably aren't even tradable depending on your brokerage that you use. But also penny stocks just tend to have shady stuff going on that we're not dealing with. There could be legitimate companies that don't have that stuff going on. When you make it to the bigger leagues, the middle leagues, the mid leagues, then we'll deal with you. But before that, no, we're not dealing with you. You don't want to mess with that stuff. They also tend to be very illiquid, and this needs liquidity. We are changing out things sometimes every quarter. We're only holding on to some positions for maybe 3 months at a time. We want liquidity. We don't want to be stuck in a position that we can't escape out of and watch all the profits drain away. Or watch our losses continue to go bigger before you cut them. Same with the average volume over 500K, because we want stuff that, again, we want stuff that money's moving into, moving out of. It doesn't have to be the big, super big boy stuff yet, but we don't want to miss the stuff that could be emerging as well. If it's still, if it fits over the 200 billion market cap, it's a decent business and something may be moving in there. We do want to catch stuff early. We're not timing the market, so to speak, although if someone could do that, that'd be awesome, but I can't do that. But as stuff is moving up, we want to catch on to that wave, and then when it's about ready to when it's about ready to go down, hopefully we've taken some profits by then. I say hopefully because stuff happens intra-quarter. Well, it is what it is, but hopefully entered in early enough to still take profits anyways. We're not necessarily concerned on timing the exact peak and the exact low, but we want to catch it on the way up and then start selling a bit on the way down. And that's what these filters are to help us find. The next filter that we're looking at here, I'll wait for that to load. So the next filter we're looking at here is the 200-day simple moving average. Just like with the trading view stock and checking the S&P 500, comparing it to its 200-day simple moving average, we want to be above that 200-day SMA. All right, if we can do that, that means they're going good. That means they're still rising, and we want to catch the winners as they're rising. We don't want to catch falling knives. I understand the thing of, buy them at a discount, buy them at, on sale, as some people will try to call them. And that's fine for our long-term positions, because we don't care if it drops 20, 40% in a given year. You don't care if it's long-term because you're holding on for years at a time, and that buying them low now, they'll recover later. You're DCAing down, so your cost basis is going that's all great for long term, but the Moonshot core is not long term. So we want to make sure that we're still on the upswing and then let it go. Same with the 52-week high low. We want something that's, now the preferable is actually 0 to 15% below the 52-week high, but the free version of FinViz here does not go down to a 0 to 15%. And only elites can do custom filters, and your boy broke, so we ain't doing that. This is also to just use what free tools we can. And now the biggest part that changes a lot of things up, actually they all factor in to change. It's only 5 filters, so they all carry a lot of weight. The other thing we're looking at here is the pattern being channel. Now, in case someone doesn't know exactly what a channel pattern is, it basically means something's been trading within a relatively tight range compared to other ways it's traded. I guess these are ways to show you. I think Dell had so Dell shows this, right? So if you're looking at Dell in this chart here that comes up, you'll see that from about April to June, it's slowly going up, slowly rising, and then it just shoots up in June. I don't know what happened in June. I don't know, some tech thing got announced or something for them. I don't know. I don't pay attention to the news for that stuff, because with this, you don't really have to. You don't have to be super plugged in to the world of tech or transportation or oils or, I don't know, international. You don't really have to be plugged into anything for it. Again, we're going for simplicity. The average everyday investor, average, I'm assuming, is not going to be spending their time keeping up with the news on every little thing out there so they can know, oh, I want to go into this industry next. Energy is booming. Now it's tech that's booming. Now it's the old school industrials that's booming. Now it's precious metals booming. We're not doing that mess. That's what this is for. That's what this whole system is for. Rules based. If it makes the filters, we go for it. If it doesn't, we don't. Simple as that. But again, explaining the channel part. Now, after Dell shoots up in June, you'll see as well here that from June to July, it's kind of going in a zigzag. Not really going up, not really going down. It's kind of staying in this range. It goes down a little bit, then rises up, then rises down, rises up, rises down, rises up, rises down a little bit, and it stays in this certain price range here. That pattern is what's called a channel. What some people like to say or possibly theorize is that it's being positioned for a quote unquote breakout. Basically, like what happened in June where it shot way up. Yeah, that's a breakout. I don't really see a channel there, just kind of steadily rising there throughout the year. But that's what we're aiming for with these Moonshot core stock picks. When stuff has been rising and is doing good for the year, but then it starts trading sideways like that, and it starts almost plateauing, so to speak, or has that channel trading pattern. But we know it looks like big tech or big industry or big pockets are wanting to get more shares of this stock without driving the price up too much. So they're not just getting it all at once and driving the price way up. They're trying to get it and keep it at relatively the same price, because they know why? What? It's gonna go up and it's gonna shoot up again, and they want to get it in before it shoots up again. I mean, they're not gonna do that if they think it's gonna go down, right? That's part of why we have the over 500k daily volume, or over 500k average volume, sorry, and over 2 billion market cap, because we want to go where the big money is going. We want to try and mimic, if we can, some of the moves that they may be making, see where they seem to be planting stuff, and then be like, hey, let me get on up in there. I see y'all doing this type of stuff. Let me get in there for a bit. I'll ride it out. Because here's the thing. If Dell stays in the Moonshot core filters, we stay into Dell, and eventually it will get out of this pattern. It will fall out of the parameters of these filters. And when that happens, well, hopefully it's up when that happens. It shoots up and gets out of the parameters of these filters, breaks out of the channel pattern. And then we're like, sweet, that's awesome. We're making monies, we're making banks. Now, will this catch the next Nvidia? Who knows? If you put the stuff through AI, it'll, AI likes to give you confirmation bias, right? And it'll be like, yes, this would have caught Nvidia in 2016 with these parameters while it was going up, and then it was sold out at this point, and then caught it again in 2020 and was up. But past performance is no indicator of future earnings. So here's hoping, right? So that's the channel pattern, right? Now, see, the same thing with RRR here. The channel for this one doesn't seem to really start until July. It looks like it just started going into a channel. Because again, we're looking for that sort of sideways looking trading. And it goes up and down, but it's sideways, not as drastic. Like if you look from April or March to April, those are big moves. And then from April to May has like a whole like mountain formation looking there. Like it goes up and then up through mid-April, then straight down through mid-May, or through to May, sorry, from mid-April to May. And then from May to June, it's kind of seems like it's almost all over the place there, a little bit of pattern, but then it shoots up towards the end of May going into June. And then it's been steadily going up, or not steadily, steadily, but as steady as stock markets can get, right? It's gone up from June to July, decently steady enough up. But then in July, you'll see it's been going a little sideways here. That's that channel pattern. Those are the patterns that we're looking for. We need you to be, again, above your 200-day simple moving average. So you're still above where you were 6 months ago. That's what we care. That means money's been put into you. We want you 0 to 10% below your 52-week high, because we don't want to catch you right at the peak, but we still want you close to the peak. Well, we want you close to the peak, but we also want you in that channel pattern, as in you're still trading relatively close to the peak of your 52-week high. and you're going a little sideways there, like something's trying to bottle cap you, trying to get in there before you shoot up again, right? Because remember, from March to like mid-May, this thing was going down. From March to mid-May, this thing is going down, but then something happens around maybe mid to early late May, and it's starting to shoot up, and now it's going sideways. It's not going down, it's going sideways. We want to get into that. Now, IVZ, again, at this point, you may start to recognize, okay, so this is what a channel pattern actually is. This is what he's talking about here. You can kind of see this in the chart. So again, we got like from about March to April, so it goes down a little bit, then channels a little bit, but then it goes up from April to about almost mid-May. Then it goes into a little channel pattern till about mid-June, shoots up mid-July, but then drops. Someone was like, nah, we ain't doing that mess. Okay. And then from about late June to July, it starts to go up again, and then now it's this late July here, it looks like it's starting to get into a channel pattern, because I don't think IVZ was in Friday's screening of this. So the question then becomes, right? Here's a good question for this. I guess we'll see and hopefully find out soon. So from like mid-May to about mid-June, it's in a bit of a channel pattern. And then it goes up for like a little bit, and then it drops. And this is also part of why we're only checking this quarterly. Because if we had started in June, we were like, yo, IVZ, let's go into it. And then we check this again like mid-June and then into late June, and we're like, oh my gosh, it's dropped down so much. It's wrong. It fell out the channel, but now it's down, and now I'm losing my. And then you do what? You panic sell with your paper hands. Nah, we hodl. I'm just kidding. We're not hodling around here. That's for crypto stuff. But no. No, we panic sell with paper hands, right? But we don't do that around here. That's why we check quarterly, because as you may notice, during the quarter, like say if we started in June, because that's when the channel pattern was, right? We're DCAing throughout the whole quarter. So yeah, we're getting in at those early June prices. We may, depending on when, our 2-week thing hits, because we're bi-weekly DCAs over here. So depending on when payday hits, we may have caught the high part, right? We may have caught the high part of that June, or we may have caught the very low part, or somewhere in the low parts going towards July. Depends on when your payday is and when your DCA date is, right? But then if you kept DCAing, you would have caught some as it goes back up, and you would have caught some as it's in this channel pattern. So the parts that you bought in early June would be up right now. And depending on when and actually by the looks of it, even if you bought at the peak of June, it looks like you would actually still be up right now. And if you bought towards that like dip in June, if that was when that's when your DCA hit, when your payday hit, and you get that paycheck and put some into it, then you'd be even up even more. AKA stick to the plan. Don't get emotional. Don't get attached. Don't panic. Stick to the plan. Let's see. Poor here looks like it's, if my mouse does not stop moving. Okay, so poor here had some drastic stuff. My gosh. Let's see here. I mean, it fits, but hey, it fits. It fits the descriptions, and this is why we're in it. When you look at this chart and be like, oh, it's gone down, it's everywhere. It's gone down, like from March, it was something. It's done shot way up, or it shot way down. Actually, it went straight down, almost cratered. Like it went down, something tried to pick it up, it went down again. Something tried to pick it up and picked it up decently in April, and then it just tanked all the way till about mid-May. Then someone tried to pick it up from mid-May, started from the bottom, now we're here. Except for the fact that folks were like, I don't think so. And they were like, let's bring it down a little bit in June, and then it's slowly been creeping. But then you'll see here that in July, I don't know if I'd really call that a channel pattern, but hey, the filter says it's a channel pattern, so I'm going to trust the people who made the filter to know more than me about what a channel pattern really is. And I guess we could call it a channel. It's going down some, but it still counts. It's still above. It still fits the other stuff. We're still within 0 to 10%. We're still above the 200-day SMA. So hey, we're in it, and we'll see where it goes. And that's also part of why the Moonshot core is only 5% of XIV-8 portfolio. Because if something tanks, if it wasn't the one, something happens, it's okay. There's only a small percent of our portfolio. And then GTLS just doesn't exist anymore. So that's that. But it was also in a decently channel pattern for a bit there. But yeah, it doesn't exist anymore. But that's how this works. That's how the quarterly analysis works. As in, we look at the rules. If the rules say it, you do it. Now, if this was more than 10, if there were more than 10 stocks, what we would also do, we also go by the best performing ones over the past half year. Hence this order by performance half year. Because we don't want to do more than 10. We're not trying to spread ourselves out that much. Because again, we want to capitalize on the winners there. And so the ones that are doing the best, the top 10, we'll go into those. But you may say, no, I like your stuff, Xeyyakkenn, but I don't know if I want to do the top 10. If there's more than 10, maybe just do the top 3 or the top 1. Okay, that's up to you. If the list only showed 1, we would only be going into 1. If the list showed 10, we'd go into 10. If the list shows 11, we'd go into the top 10. I limit it to the top 10 for XIV-8 before the Moonshot core typically says 5. It says 5 to 10 in the rule description. But it also says if there's only, if only 1, you just go into the 1. But 5 to 10, because you don't know which one it is that's gonna shoot up. All of these could crash and tank tomorrow because some building burns down, or because the CEO is found to be in some shady stuff, or whatever the case may be. You don't know. So don't just pick one. Just pick them all. Grab a basket. Don't put all your eggs in one basket, right? Diversify, quote unquote. Although I'm pretty sure most of these are in similar industries. Dell is tech. I don't know what. Red Rock Resorts and Casino. Oh, it's a casino. Yeah, we should look at that. IVZ Asset Management, Investco Ltd's asset management. We're not even in IVZ right now, so whatever. Portland General Electric isn't that like a I'm thinking General Electric. I'm thinking like the electric company. Just General Electric, which they do a lot of stuff. Is that their new logo? Anyways, you get the point. We don't care what they do. We only care about the numbers. So, but that's the quarterly analysis for XIV-8 for quarter 3. So, granted, IVZ is not in it, but the ones that I showed you before, the Dell, KNTK, CMI, LH, RR, POR, and Texas Roadhouse, and not XPO. XPO was the last one, not in that one. But Texas Roadhouse, that was the last one. You've seen the ones that were in. These are the ones that I'm in for quarter 3. The next videos I'll do are probably ones explaining the Xeyyakkenn Investment Values portfolios. Although hopefully I catch up on getting these out there, because I think this is already technically behind on when they should be. But anywho, and this is already a long enough video, I'm pretty sure. My gosh, I'm over here at almost 40 minutes. Okay, I need to hop off here. Thanks for watching. Thanks for sticking along. I'll see you all in the next one. Stay blessed and stay safe out there, because the streets ain't safe. And stay safe on the web, because there's spiders everywhere. I'm out.